Hello students, welcome to the class of Introduction to Accounting, class 11. Today we will be focusing on simple and basic foundation of accounting, that is meaning of accounting, definition of accounting and process of accounting. So let's get started with our video. Introduction to Accounting, we have definition and meaning. Let us first understand the simple terms of meaning and then look into the definition. So here we see that accounting is an art of recording, classifying and summarizing in significant manner and in terms of money, transaction and events which are in part at least of financial character and interpreting the result thereof. So we see here that accounting is defined as process of reporting transactions, classifying and interpreting and summarizing the economic data. So introduction of accounting, this also gives interpretation of results. It helps in decision makers of the company to make the choices by providing information of the financial status of the business. So here we simply understand that accounting is recording of transactions, classifying and summarizing of transactions. To deeply understand this and the process how the accounting works, let us first understand the process of accounting. So we have series of steps to be followed by a business entity to record business transactions. That includes identifying the transactions. First step, recording those transactions, classifying, summarizing, analysis and interpretation, communication. So this is how the process is done. This is how the steps are to be carried out. Let us understand more by looking into the example. So here meet Vidya. She runs clothing business. Now let us take a deep dive into Vidya's clothing business, like what all activities she is undertaking in a particular month. Okay. Let us read out the transactions one by one. First one, Vidya purchases raw materials and clothing stuff worth rupees 1 lakh. Okay. Second, she purchased new phone worth rupees 35,000 for personal use. Okay. In the first transaction, we see that she is purchasing raw materials and clothing stuff. Here, by reading this transaction, we can identify that this transaction is completely related to business. Okay. Next, second transaction, we see that it is specified that it is for personal use. So this transaction is not to be considered. We have to always remember in business accounts that when we are identifying the transactions, we have to identify the transaction which are related to business and which has some value which is expressed in monetary terms. We see that it is expressed as rupees 1 lakh stuff. Next, in the second transaction, we see that she was purchasing it for personal use and it is not related to business. So such transactions are not to be considered. Next, third transaction, she spent rupees 15,000 in promoting her clothing business. We clearly understand that it's related to advertisement and this transaction is taken into consideration. Her business makes sale of rupees 1,50,000. Again, by reading of the transaction, it indicates the sales of a clothing business, which again is related to business of the organization and it is taken into consideration. Let us go back to our process, and here we understood that identifying transaction must be related to business and must be expressed to monetary terms. Must be expressed in monetary terms. Next, let us go back to example again and see that Vidya records all business transactions in a book called journal. It's an obvious that every business records the transaction. They see as and when the purchase is made, as and when the sale is done, to have a look, to understand the activities of the business, we record every transaction. And recording of this transaction is known as journal, is done in a book called journal. So in journal, we are having a detailed record of all the transactions done by the business. Journal records all the transactions done by the company. Next, we have classifies similar types of transaction and post them in ledger. So classification means segregation of same nature, basic nature, and posting them into a format called ledger. Here, when Vidya was recording in journal, she was recording all together, all purchases, all sales, all rent. She was just recording everything. Now, when she is classifying in the ledger, she brings all the purchases together, all the sales together, rent paid together. She classifies similar types of transaction and posts them into ledger. Next, we have summarizes. Summarize transaction and bal- records them in three financial statements: trial balance, profit and loss account, and balance sheet. Here, summarize is nothing but giving a report card of business, like what is the financial performance, what is the financial stability of the organization, and this is given in three different statements: financial statements, trial balance, profit and loss account, and balance sheet. So let us go back to our process, and here we understood that recording is done in book called journal, classifying is done in book called ledger. Okay, next, summarizing, we understood that it is just given in three financial statements as a report card of business. Okay, next we have analysis and interpretation. Okay, analysis and interpretation. Here, what we understand that, let us take an example of a school student. At the end of the year, a report card is given of every student, and looking into that report card, we understand that how a student actually working in the school, which subject he is excellent and which subject he needs improvement, what all the activities he is taking part in the particular year. So here, looking at the accounts of a business, looking at the three financial statements of business, we can take decisions relating to our business. We can understand how is the business performance. So Vidya also, after doing recording, posting in ledger, and preparing the report card, that is financial statements, summarizing in financial statements, she is able to understand how much profit did she make. She is able to decide, she is able to analyze that how much profit did she make, how much profit did her clothing business make, which item is more profitable. She is running clothing business, we have multiple stuff there, shirts, pants, skirts. We can understand that which particular product was sold more, which product stock is left over, what are the trends coming in the market, how to adopt according to that. So here we can again analyze looking at the accounts. Next, should she expand, is there any scope with how much profit did we made, is there any scope to expand our business. So analysis or interpretation is, it includes the assessment of financial reports and making some meaningful decisions, coming at some meaningful conclusions. So here we understood what is analysis and interpretation. Next we have communication. Communication in the sense, accounts of a business is the language of business. Accounts is termed as language of business. It speaks how an organization is working. Looking into the accounts of business, we can understand financial performance, stability, activities, income, profit made, losses incurred. Everything can be understood. And communication, there are many people who use the account of business to understand how the business is working. And for those users of accounting, communication, this account serves as a communication of a business organization about how it is working. So here we understood clearly with the help of example how the process is taken. First, we have to identify only those transactions which are related to business and which are expressed in some value, monetary value. Next, recording is done in book called journal. Classifying, similar types of transaction are classified and posted in ledger. Summarizing, it's given in three financial statements and it is the report card of business. Analysis and interpretation is nothing but coming into the decision, taking some decisions and choices, making choices and coming to conclusion with the help of accounts. Communication is nothing but it speaks, it is the language of business. Okay, now let us go back and understand the definition more clearly. We had left this definition part and understood first the process. Now we can understand definition more clearly. Okay, let us read out. In 1941, the American Institute of Certified Public Accountants, this is an accounting organization, and they gave definition as accounting as an art of recording, classifying and summarizing in significant manner. We know that that manner is in terms of money, and must be of business related, which are part of financial character and interpreting the result thereof. and interpreting the result thereof. Here we understood same simple terms, we understood meaning, and we understood the process with the help of example. So just to summarize what all we learned in this video, that is accounting is the process of recording, classifying, summarizing financial transaction of business in such a manner that result, yes, report card of the business operations, financial position is given at the end of the period and communicating them to various users. Okay. Next, accounting is called language of business. Very important. Accounting is called language of business because it's the purpose of accounting is to communicate, to report the result business operation to the various users of accounting. Who are these users? Users of statements and reports that are needed by various groups such as shareholders, creditors, potential investors, communists, or financial newspapers, proprietors, and others. And why do these people use the accounts of business? Why are they so much interested in the activities of the business? Let us study in our next video. For now, if you have any doubts related to process, definition, and meaning of accounting, you can post your doubts in the comments and we will solve them at the earliest. Till then, happy learning.